In recent time periods, many companies have come with what we call as non-convertible debentures or NCDs. So they have issued this in the market. People are subscribing to this. And so here we are to understand many things about this non-convertible debentures from angle of investors, from angle of company. What exactly are these non-convertible debentures and is it beneficial to invest in them? So basically, we are going to answer these three important questions. What are non-convertible debentures? Second is what is the benefit of investing in a non-convertible debenture? And third is what are the risk factors of investing in an NCD? As investors, most of the people would be concerned with three important things. First important thing that an investor would be considering when they're investing in any, for that matter, any kind of instrument or any kind of investment plan would be, firstly, they will look at the returns. What is the returns that that security is given? Secondly, they would be interested in whether there is any kind of lock-in period. So is their capital which they're investing getting blocked in that particular investment? So are they able to transfer it in the times of needs? And third important thing they would be concerned is about the security, or basically what the capital is there invested, is it secure? So capital security would be the third important thing they would be looking at. So we are going to answer these questions and understand non-convertible debentures in detail in today's video of Commerce Gyan. So what we are going to take up first now, first is we are going to understand what is this NCD or what is a non-convertible debenture. Now we are aware that every company would be investing in their business with two bases. Either it is their own funds in the form of equity shares, or it could be a loan fund, which is also called as a debt fund. So a non-convertible debenture is basically coming in the category of what we say a debt fund. Second thing that this non-convertible debenture focuses on is returns in the format of fixed returns. Third is that this particular non-convertible debenture, being a loan, it's secured by an asset. Now, after security of the asset, what we need to understand is that, as the name suggests, non-convertible debenture. So it is not convertible into equity shares. Now let's see these features in detail. Now, very interestingly, debt instrument means it's a loan given to the company, right? So a company wants to raise some capital. Let's suppose the company requires a loan of 10 lakh rupees. So what it says, I will not take the loan of 10 lakh rupees from one single person. Instead, I will break this loan into 100 parts. So each part of the loan which the people are going to buy will be amounting to 10,000 rupees. So each debenture, each part of the loan will be equal to 10,000. So what the company is doing here, instead of one bank giving loan to the company, many different people will give the same amount of loan to the company. The second feature that we just talked about of non-convertible debentures is fixed returns. Now, many investors would be the ones who could be even in the category of retired people and people who would like to invest in the company for fixed returns. So they don't want that, that fluctuations which happen in the equity market, and they don't want that instability. So what they do, they can go for this type of non-convertible debenture where it is basically giving you a fixed percentage of returns. On general basis, they are not floating. They could be also floating interest rates, but most of the non-convertible debentures are having category of fixed returns. Now, what is the benefit then? Even fixed deposit give us fixed returns. Then why are we going for non-convertible debentures? This would be your next question. So for this answer, you should understand that as the companies want to attract investors, what they do, naturally, they're going to give a higher return on the non-convertible debenture in comparison to fixed deposits. So it's just like a fixed deposit for the investor, because I'm just putting in money and getting a fixed return against it every year or every quarter, whatever the case may be. And this fixed return is higher than fixed deposit. People often ask me that, okay, if it is fixed return, do I get it yearly? Do I get it quarterly? Do I get it monthly? Well, that would depend upon what the non-convertible debenture has in its clauses. Most of the NCDs give you the returns on half yearly or yearly basis. That means twice you get in the year, or you get only one time after the year ends. Just read the terms of that non-convertible debenture while buying it to see whether they offer you monthly, quarterly, half yearly or yearly returns, right? So now coming to the next important thing, security. We want security of capital. Is it guaranteed by the non-convertible debenture? Let's see that. So in a non-convertible debenture, asset is used as a security. So any land, factory building, or any movable or even immovable properties. So any immovable or sometimes even movable assets like plant and machinery are used for the purpose of securing the assets. So what is basically the security now? Security means what? Just like when the bank gives you a loan, they say, okay, if they're giving you a gold loan, they say, gold, give us the gold, we will keep it in our locker safe till you return the money back, correct? So same way here, what happens? The company is taking a loan from you this time. It's not giving you a loan, you are giving the company a loan as an investor. So it's like you're giving loan to the company and you want a security for that loan. So in this case, what does the company do? Now, each person, the company cannot give a separate mortgage or a separate pledge. So instead, what they do is the whole issue of that non-convertible debenture will be taken into consideration and secured. Now, how do they secure it? First thing they do is they appoint a trust for the purpose of this non-convertible debenture. Second thing they do is they mortgage or they pledge the asset as security for the non-convertible debenture. So they decide, okay, land of the company or building of the company or plant and machinery of the company, what is to be acting as a security. So they say this is the trust appointed. These are the amount of non-convertible debentures that I'm going to issue in the market. And for these non-convertible debenture, these are the securities. So this is all mentioned in the trust deed. Now, when you are giving this particular asset as a security for this non-convertible debenture, what happens? This particular asset is specifically reserved for that NCD and it will not be used for the security of any other loan, nor can the company sell off this asset without the permission of the trust or keeping some other collateral for the non-convertible debenture. So it's basically a very good thing for the purpose of investor interest. So just like our fixed deposits are safe with the bank, same way our non-convertible debenture is kept safe with the company, with the security. So in the event the company goes into liquidation, it becomes bankrupt, it doesn't have any money, then what? Then it still has the asset and this asset is secured for the purpose of NCD. So this asset will be sold off, and once it is sold off, the non-convertible debenture holders will be given back their money against whatever this asset they had. So, and finally, what is the feature of the non-convertible debenture? The feature of the non-convertible debenture is, as the name suggests, not convertible to equity. Now, you would say, what is this conversion to equity and all? So, it's basically when the non-convertible debentures time period ends. So, let's say the loan period that you had given the loan to the company was for 5 years. So, 5 years is over. Now, what? Now, company either has an option to take this loan and give it back to you. So it has to give you back in cash in the form of some bank transfer, or it has another option. That means instead of giving you the money, they say, okay, you take the shares of the company. So what is the benefit to the company? If you are taking the shares of that company doesn't have to pay cash. It just has to issue shares to you. So only thing they are doing is part ownership they're sacrificing and they are getting money in hand. So this is a beneficial thing for the company, but mostly now the convertible debenture issue is not allowed. What is allowable is now the non-convertible debenture. So if you are taking a loan, let it be a loan only. Don't say after the period ends, it will be converted to equity. So this is another benefit now for the investors because you're going to get back the money. You're not going to like have the conversion into equity. Then equity shares, you don't know what the share value is there at that time when the company is giving you back in the form of shares. You don't have to worry about that. Whatever capital you invested, let's say 1 lakh, 5 lakhs, 10 lakhs, whatever was invested is going to be got back. So this is the benefit of NCDs. Now, as a person wanting to know about non-convertible debentures, you'll think like, why is the company going for an NCD and not going for a loan? Isn't it easy for the company to just take a piece of paper, sign a loan agreement and get the loan from the bank? Why is it going for NCDs? Right? So this is what we're going to understand now. The reason is because here, because of the reputation of the company, you get quick money, right? People know the company, like we have the big names in the industry like Tatas and Ambanis and now Adani and other such people. So these people, if they are going for non-convertible debentures, they're saying, okay, come and buy the non-convertible debentures from us. It's like a loan you give to us and we give a fixed rate of interest. You'll be more than happy. Yes, okay, I will buy that particular investment and I will get the fixed return, right? You will be happy for that. This reputation helps the company to get the benefit of the loan on a quick basis. And you don't have to explain yourself, naam hi kafi hai, right? Because the name is there, you go and take the NCD. Now, here for issue of debentures, there are simple formalities which are much more better than that of going for the loan process in most cases. And with simple formalities, another thing is that you can have your own terms. You'll say, okay, I will pay interest on yearly basis. I will pay interest on monthly basis. I will repay the money after 3 years, or I will repay the money after 5 years. So you can decide your own terms. If you go to the bank will decide the terms of loan for you, right? They won't say, okay, tell me when you want to repay. They won't say that, right? They will say, you have to repay on these terms, fixed installment, so much interest, so much of principal, and so on. So there is no liberty that the company has. Whereas here in NCDs, the company has a lot of liberty, and that's why they go for this issue. Another important thing is they have a fixed time period for repayment. So after 5 years, they have to pay the capital. In case of loan, what happens if it's a term loan? Every now and then you have to keep repaying back the principal and interest. So if it's a fixed tenure like 5 years, within 5 years you have to keep paying even principal amount every month in the form of installment, which doesn't happen in the case of NCD. So that lump sum amount is got for the company to use for the entire period of 5 years without giving it back. So this is a very important thing which the company can actually benefit from, where it can invest this money into income giving assets, and with this income it can actually pay off the interest, and later on it can pay off the principal. So it's simpler and it's very easy and it's convenient for the company, and so company goes for non-convertible debentures. Now we have understood why company goes for debentures, but now let's understand why investors would want to invest in a non-convertible debenture. Till now we have understood fixed returns, security of capital. Yes, two things we have understood very well, so I'm not going into detail again. Third thing that is very important for non-convertible debentures is that they get listed on the stock exchange. So once the debenture is issued to the general public, everybody has bought it and the issue closes, the company got the money. Now what it does, it lists this fund just like shares are listed on a stock exchange in the secondary market. Same way, debentures also get listed in the stock exchange. And what is the benefit to the investor? Trading. Trading doesn't mean that you buy and sell it on daily basis, but what it means, just in case I want an emergency need of the fund for some purpose, maybe household health emergency, whatever reason. So I need the funds now. So what I do, I go and sell it in the secondary market. There would be somebody else in the secondary market who's interested in buying that debenture from me. So they buy it, I sell it, and I get the money back. It's simple. So in case of emergency, you don't have to worry, I have to wait for 5 years lock in. No, you don't have to, because there is an option of secondary market just like shares. Another thing for the investor, if you see, it's a short duration. 5 years is not a very long duration of fund. 3 years also, sometimes there are NCDs which are of 3 years. Sometimes non-convertible debentures are of 5 years. So it's a short duration fund. It's not like 20 years like life insurance and all that. So you have to keep that money locked in for 5 years, and you keep getting the fixed interest rate. So it's good in terms of a lock-in, because sometimes if you're keeping an FD, you may be tempted to dissolve, just liquidate that FD and get the money for personal use, which does not happen normally in case of NCDs. It's not so easily liquidated. So you wait and you can just have that temptation of liquidating your assets. Just you can keep it aside, set it aside. So this is a beneficial thing for people who may be tempted to liquidate the fixed deposits. Another thing is credit rating. So there are agencies like CRISIL who are actually rating the debenture. So they will say how risky is the debenture, how good is the debenture. Based on that, they will have ratings. And with this rating, you can actually have a very clear understanding of whether to what extent you're taking the risk and whether that debenture is safe or not. So this is a very good thing for the investor: safe, secure, and fixed return. So what more do you want? Now, so you're excited and you have understood non-convertible debentures, and you say, okay, now I want to buy the non-convertible debentures. How do I buy it? Can I just go today to the company and say, okay, give me non-convertible debentures? Basically, not so easy. Normally, companies come up with issues of non-convertible debentures just like shares are issued through IPOs, like IPOs and FPOs. So companies go for the issue of debentures. Just like recently, we have the issue of Adani non-convertible debentures. So there was one example which I can quote, which was the recent issue. Now, so what they did, they first announced the issue. Then what happened? The next was people went on to their brokers, their agents, and they said, okay, we want to subscribe to these non-convertible debentures. So they subscribed to these, and they said, okay, I'm interested in buying 10 debentures, 20 debentures, depending on whatever they were willing to invest. And then once they got the request from people, they got the offer from people, they selected based on some method which was pre-planned, pre-decided. And based on that method, they did the allotment of debentures. So there were some people who got the debentures allotted. And when they got the debentures allotted, money was taken from them in the form of loan, in the form of that debenture. And after the subscription closed, that debenture got listed on the stock exchange. Now, a bigger question many people may have in mind: okay, I'm going to earn from the debenture. Now what? Taxes. What about the taxes? So taxation wise, if you see the non-convertible debentures, when you are investing them, there is nothing like a tax saving or something like we have ATC benefit, nothing like that. And second part of it is when you are actually getting the interest. Is this interest chargeable to tax? Yes, the answer is yes. It will be charged as normal income, like fixed deposit interest is charged. Same way, this will be charged under income from other sources, added to your regular income and taxed at the regular tax slab. It is not a special rate, but it will be taxed in the regular tax slabs. So what about the withdrawal now? If you withdraw that non-convertible debenture, you sell it on the stock exchange. If you get a higher price, it's a different story of capital gains. But if you're a regular person at the end of that time period of 5 years, you liquidate back, you get back the non-convertible debenture, then the capital amount that you get is not taxed because it was a capital amount invested, capital amount got back. So no tax on it. So taxation would be only in case of interest and in case of any gain on sale. So hopefully this helped you to understand what are non-convertible debentures. I'm sure the investors as well as people who are learning commerce, the students will be able to understand this in detail. So on this channel of Commerce Gyan, we will be sharing such things which are connected to commerce, industries, companies, investments, law which has been changing, taxation, and any other accounting, finances, and other such things as and when it comes up and whatever is found important in that particular time period. So it will give you insights into the latest updates relating to the commerce and industry. So just in case you have not yet joined our channel, do subscribe to this channel and keep watching. Hope to see you in the next video of Commerce Gyan. And if you have liked this video, do press the like button. Put your comments. If you have any questions, also you can put in the comments. I will try and make the video ahead on that on whatever questions you have. Then do subscribe and do share this video to people who may like it. Thank you.